like every central bank in the world, is thinking about central bank digital currencies. I think it's important, I know you know this, but for the record, to distinguish between stable coins, which would have fixed values and might be suitable for being used in payments, and things like Bitcoin, which are more of a casino type investment that you can see fluctuating greatly. And so there's two very, very different things. There's the fintech idea that you should be able to put your money somewhere and maybe hedge against fiat monies, which have one set of issues, and then there's the relevance for trying to squeeze costs out of the payment system and create something like that. We're committed to publishing a discussion paper in March that will lay out a bunch of the issues. And I'm sure that we'll be back here after we've done the analysis to tell you where we come down on the spectrum of exactly where we want to go, whether the Bank of England will endorse something that would be its own currency. The principle that we've laid out is that anything that's serving the same purpose has to be regulated to the same standard. So that it doesn't matter what it's labeled, it's going to function as money. It's got to have all the protections for money. So we're going to guarantee that is there. But beyond that, we haven't prejudged exactly what the landscape should look like. We think it's important to have innovation. We don't want to stifle innovation, but we also don't want to put our thumb on the scale to prejudge one outcome versus another.
You were just listening to Anil Keshap, who is an FPC member of the Bank of England here in the UK. On January the 6th, they held a meeting to discuss CBDCs and stablecoins. And at that meeting, you had the Governor of the Bank of England, Andrew Bailey, Mel Stride, who is the chair of the Treasury Select Committee in the UK government, Sam Woods, who is the CEO of the Prudential Regulatory Authority, and also fellow FPC member Donald Cohen. So things are really moving apace in the world of digital assets, stablecoins and CBDCs here in the UK. Listen to what Donald Cohen has to say. And this guy is a 40-year veteran of central banking.
For private stablecoin used in payments, the committee has said that financial stability will depend on people being as confident in their ability to exchange that means of payment for goods and services for other means of payment as they are in bank deposits, which are another private form of payment. So the regulation of the stable coin should ensure the same kind of confidence that once you have a stable coin, you can convert it into a bank deposit or into a bank note, into cash that people have for bank deposits. If the concern is if you created stable coins and people thought they were good for payments and thought they were convertible into fiat money at a fixed rate, and then they weren't, that would cause a huge amount of damage, certainly to the people holding the stable coins, but it would could more broadly undermine confidence in the payment system more broadly, which is of course, the core of the financial system. So that equivalence of regulation of certainty, and there may be a number of ways of achieving that depending on what's backing the stable coin.
Now that question of backing for the stable coin is to me of fundamental importance. Now Stephen Baker, who's an MP, a member of Parliament in the UK government, and perhaps one of the only one or two people that even understands the concept of money and how it comes into existence, also has a view on this particular point.
But in particular, when we talk about potentially a stable coin being backed by central bank reserves, isn't there a question that then is on the table that we could end up entirely nationalising the monetary system? Because if stable coins are being used widely in the payment system and are backed by central bank reserves, possibly are issued by the central bank, is there not a world which emerges where people say, actually, I'm going to cut out the private banks altogether and decide that I'm going to in a sense, keep my money in stable coins at the Bank of England.
Arguably, banks will be rendered worthless in the world of stable coins and CBDCs. Let's see what the report looks like in March to see how they tackle this and many other questions as it relates to stable coins and CBDCs. Now this is Neil Liversidge. He's a financial advisor and he works out of the UK, and I think his specialist interest is consumer debt, those who have perhaps got into debt troubles. Now he's just launched a petition to stop UK cryptocurrency transactions. Now he's got 6 months to see if he can force our government in the UK to force a debate on this subject. Now as you can see, he has 112 signatures. If he gets to 10,000 signatures, then they'll respond to this petition. And if he gets over 100,000 signatures, that's when there's an opportunity to debate the subject in the Houses of Parliament in the UK. As you can see highlighted below, last July the regulator began consulting on the ban and saw an overwhelming 97% of respondents oppose its proposals. So let's see what happens when we get to July and to see whether this gets on the floor of the Houses of Parliament. But my feeling is, I'm not so sure this is going to get any traction whatsoever. Moving across to Germany now, the authorities closed the world's biggest darknet market. Now this was an illegal marketplace which had over 500,000 users and processed over 4,500 transactions in Bitcoins and Monero. Okay, let's get into the details. The Central Criminal Investigation Department in the German city of Oldenburg arrested an Australian citizen who is the alleged operator of the dark market near the German-Danish border. The investigation, which was led by the Cybercrime Unit, allowed officers to locate and close the marketplace, switch off the servers and seize criminal infrastructure, more than 20 servers in Moldova and Ukraine, supported by the German Federal Criminal Police Office. The new data stored will give investigators new leads to further investigate moderators, sellers and buyers. Staying in Germany, Vonovia, a housing company, uses the Stellar blockchain to issue a $24 million bond. For the first time, the housing company has issued a fully digital registered bond in the amount of 20 million euros. That is, of course, 24 million US. So Vonovia issued fully digital bonds for the first time via the online marketplace First Wire. It was only in mid-December that the federal court passed a bill to introduce electronic securities, which is intended to advance the digitization of the German financial center.
Now, Sebastian, what are the challenges that NGOs face when receiving donations, and how is blockchain part of the answer?
Well, the classic challenge that we have as an NGO or as an organization receiving donations is to ensure to the public transparency vis-à-vis the use of the donations that we receive. Blockchain is a nice way, or traceability of the donation from the donor to us, UNICEF, to the actual beneficiary of the donation. So it has a potential to enable us to track donations from the donor directly to the beneficiary. So in that sense, obviously this is a strong factor for enabling trust in the future from the donors to the NGO or to the organization they want to support.
It's clear that mass digital adoption is not too far away, as we find more and more use cases for the distributed ledger technology that is the blockchain. Well, that will do it. That is your UK and European update. I am Defiont on the blockchain, digital assets and sound money, and of course the whole ecosystem that is the Internet of Value.